Hey, good morning, good afternoon, and I first of all I appreciate your mention in the group and asking for my opinion and valuing my opinion. Uh, Sorry, I have currently issues typing, so I tried to use voice dictate and also send you a voice note, but it's like 3 minutes, I think, and I tried once, but it didn't work out, so I decided to just make this presentation to type and then use a different sort of interaction. I tried this approach, so these are all my opinion, all right? I'm just going to say that I have tried this. This is your question. Your question is a very deep but honest one. Like when you are asking this, it resonates with all of us because we all go to the rough patch, and then during rough patch we are going to be asking ourselves this question over and over: that if what we are doing is right, if the strategy that we have is a good one, if it is productive, we have got it all wrong, or all of these sort of questions that are coming from indecision part of the part of our brain and our process. After saying this, these are all my personal experience, I need to say another one. Tonight's session with John was amazing. All right, so that's actually triggered me to say it because I was thinking, yeah, maybe I asked John for Wednesday. So I prepare something I can type slow by slow. I could ask my wife to help, but I tried to just maybe I wait a little bit longer. But then I see that it's passing by, and then every day counts. And then also tonight, John touched on very important, very interesting topics. It's like they all come from experience, right? They all come from experience, and then I could just. Every single part is just like, this is fantastic. Like, this is the footprint of success. This is like, it's coming from someone has lost at this point, and that one person is talking about exact those losses and what happened and the process, not just the end result. So what I'm going to say here, like already 2 minutes and a half, I don't want to make it long. These are my experience I'm going to share with you. I'm going to elaborate on that. So here is your question, right? I didn't touch it, just copy it. I'm just going to break into different pieces. That's John's approach, actually. I really liked it. I'm going to break into small segments, and I'm going to just touch upon those segments. So here is that you are asking that those we have changed, those that we are responding, that what made the switch. So very, very quick and honest answer. As a day trader, somebody that doesn't have much room to just play around with stocks, P&L speaks a lot, right? So this point, the number one resonates actually with the one to the end, not the last one, but one to the end, the last paragraph. So I can tell you that the chart should tell you that what's happening. Normally, when I tell people that, how you assess your strategy, I normally say one full cycle of market, from recession to recession, from a strong trend to strong trend. As a full cycle could be 7 months, 8 months, 6 months to a year, and then this cycle resets with the consolidation, market correction. It will slow down, and you will see. But one full cycle is the experience. Period for your strategy. But in bootcamp we don't have that time. Like in bootcamp you come with talent, with knowledge. You come in to just show that what you're made of. If you are looking for a seat, you have to show the requirements. You have to face and fulfill the requirements. If you want to become a better trader, that some of the traders here are looking for, including myself, are trying to be better traders. But if you're solely looking for become a better trader, BBT and PCT are the best. So for day traders looking for a seat, if I may, I'm assuming that P&L chart should speak for your strategy. If your strategy doesn't work and it is all red, there is something wrong. Maybe you need to modify something. Maybe you need to add some more filters to remove the negative signals or expand your R. But then P&L at the end of the day, I think speaks the most. But inside of this P&L, there's something way more important. You need to be comfortable with that strategy. You need to be comfortable with the strategy in a way that even if you lose, you're comfortable. Even if you're not making money, you're red or you're barely making it, you need to be comfortable with that. Okay, I know that because I'm doing what I'm doing. I do what I can do, but it doesn't give. Like October for me was red, full red. And let me say this, dangerously red. Let me mention it like that. But I'm comfortable with what I'm doing. I didn't want to just make a big fuss out of it, but I'm going back to full size. I was on half a size and 1/4. I'm going to full size of my trade based on trade book, because I feel and I see that consolidation period of the market is over somehow, or market is moving toward the better days. So now I can at least experience better, expect better results and better breakouts. I'm trading HOD and intraday level breakout. So you need to be comfortable with the strategy. If you are not comfortable, it doesn't matter your chart is profits is green or not, you need to change it. If it's a career, you need to be comfortable with what you do. You need to be confident with what you're doing. If you are not and still switching between the strategies, well, P&L tells you. I'm going to say something here, I'm going to emphasize later again. You also need to consider this. Yes, you search, you switch, but you also need to know that what are the conditions and the basis which, based on those, on that condition or those conditions, you're switching to something or you're switching from something. You need to know that what are the conditions of the market. If market is ranging, range trading is the way to go. But if market is trending, no, you need to be on trend with a full time frame continuity, and need to be with a trending strategy. Just ranging strategy or trading against the trend will not give you much. But if market is reversing, then it is a different story, right? So this is the first answer. This is the quick short answer would be profit and loss. It should tell you, profit and loss curve and chart should tell you that if you need to switch or not. And then what made you switch, that if you're comfortable with it or not. If you're comfortable with the losses that you're making, because you know that you get lots of small or lots of 1 hour losses, but then one of your trades is gonna make 30 hour. So yeah, this is how it is. Maybe it's that sort of a strategy. If it is like 1 minute ORB, like you may get a little bit of chop at the end, at the beginning, especially that these days we have, like last month, we have had lots of choppy breakouts. So you will be chopped out. So this was the first answer. Personally for me, what makes me switch from one strategy? First, I'm not switching my strategy, I'm staying with my strategy. I'm just changing my money management criteria, and then I'm lowering or increasing the weight of my of each position. That's how I'm managing, but I'm just staying with the same strategy. Okay, was it worth it or not? Any advice? All right, so let me ask you this. Consider this. You want to go from Vancouver to Nova Scotia. You want to go from California to New York. All right, from one side of your country to the other side, something that we all know. So if you're taking a highway, right? If you're going, and then on a main highway, you miss your exit on a half a tank or less than a half a tank, you cannot just go the wrong way. You're gonna put yourself back in course. You need to get back in a way that you go toward that direction, right? So you cannot just it's just you as anyone, just you as a trader cannot be just taking the wrong way just to gather more information or just see what happens on the wrong way. But in a way, because we are experiencing strategies, we don't know if that strategy is the wrong or the right one. But this is the part that it gets a little bit mixed up. When you're looking at this strategy is my strategy, should I keep trading with it or not? Should I switch from it or not? The amount of data you have collected is very important. But then you cannot just, on a short span of time, short period of time, collect lots of data and then consider those to be valid base of data to process and get information and knowledge out of it. Okay, this doesn't, like, the question that was it worth it? If you have a big basket, like John mentions, mentions it, like 2,000 BHOD trades, that's a significant big amount of experience on one strategy. He's a master of one. He knows lots of stuff, but he's master of one. I mean, that one that he's trading, he knows lots of strategies and lots of way of trading intraday, LOD. But this is his master. Like, if I'm looking to somebody for BHOD, I'm looking at John, like, because he has just repeated the process so much that he knows that, like, I have seen this one 230 times. Yeah, I know that what this thing does. Majority of the time, this happens. And he has indicators, confirmations, and then he uses those to just get out and get in. So this is a point. It always worth to look at the big picture to see that what you're doing. Understanding the condition of the market will tell you that what you're doing fits the current condition of the market or not. Understanding the conditions tells you if it worth it or not. If personally, me personally, when I try to trade when SPY is down, when I'm trying to go long on the days that SPY gaps down or SPY is bearish, I mostly lose money. Mostly means even if I'm trading with a win ratio of 57%, okay, still my losses, they eat all of my wins, because it's not sustainable for me to trade against the market. I cannot trade those days. So those days I need to move toward trading break of low of day, because stocks that I pick, they don't have the catalyst, so they just move with the market. Okay, so this is my condition. I'm just giving you an example as a trader. All right. So during this process of looking at all of those data that you're collecting, you will gain experience. You will know that if I'm taking this way to collect data on these parameters, these other parameters will affect them. Like if I'm trading break of high of day, okay, a SPY was gapping down. This is the example. I lost money on in October in general, because SPY was free falling. So it rolled up at the end of the October, but the first 2 weeks for me was brutal, because there was a drawdown, right? So I need to look at it like, okay, so now I'm trading break of high of day. Maybe just the break of high day, just going long or short are different executions, but the whole strategy is the same. If I'm trading, volume should be increasing. I should not have any significant levels in front of me. At least should be 7 million volume of the data. A list of parameters that I have shared before, that what I'm looking for a stock. So maybe now, if the same parameters apply to a bullish stock, maybe I need to look into other parameters that are affecting a bearish stock. Maybe they are not exactly the same. Then this maybe gives you opportunity, this question gives you opportunity to think, oh, maybe my strategy is good, but I'm not looking at it in a correct way, right? Trading break of high or low of day, they are not the same. They are breaking two significant levels, but they don't behave the same, right? So you need to look at it from that perspective. This is another one. And at the end of the day, on demo account or paper money or on real account with small size or big size, your P&L will tell you that this worth it or not. From a strategy point of view, it always worth looking into new stuff. It always, because it keeps your mind refreshed. These are my experience, right? This is what I think. It always gives you fresh perspective of, okay, maybe I have been doing it for 3 years. Okay, what has changed in the market? Does my strategy also apply? Is also applicable to crypto? How? Maybe it's the same strategy, but maybe you need to change something. So you always gain experience, but when you're looking at the basket of your strategy and the psychology that you have been based on trading, you will get a better understanding of yourself. That better understanding worth millions, right? So it always worth switching. But then there is an issue here. It is not a binary condition that, okay, we were at a state of 0, it didn't work, now we have to move to a state 1, so it should work now, because it's binary. No. This process of finding proper strategy for you may take a decade. Maybe it take a year, maybe it take 5 years, maybe it takes 6 months. It really, it's not about intelligence, it's more about the market conditions, what you apply fits or not, and many other parameters that you yourself, you have enough experience to know what I'm talking about. But there are lots of details that applies, but you need to switch. Okay, this is strategy work? No. Why? These reasons. The next one. Does this strategy work? Oh, I don't know. Let's check. You trade for a period and then you see, oh, it works or not. Now, let's say after 3 switches, you still don't know what you want to trade exactly. You have 3 significant, huge basket of data. Okay, these data could be looked at from different point of view, from different models. You can get different knowledge out of, right? So the same raw sheet can give you information that if you're long bias or short bias. If you're long bias but market is bearish, this is not sustainable to trade against the trend and current trend of the market. But still, there are traders that they are doing that, and I have to learn from them how they do that. I don't know that. For me, if market goes down, I need to short. I cannot just keep buying. For me, it doesn't work. So these 3, they are answers to if it's worth it or not. But the main answer, short answer, yes. Always worth switching if you are not satisfied with your results. But there are lots of ifs into that if the current market condition is correct, if you're applying current money management. And one thing that I just forgot to put it there, I'm going to add now after after recorded this, timing. Are you entering at the correct time or not? For BHOD, if you are entering 1 minute ORB when market opens, you're talking and looking at the different market than when it is breaking at 11 or 12 or 2 in the afternoon. It's a different market. There are different players, right? So you need to also look at this. Then we move to the next part, which is somehow connected to the section 2, that how you balance these two, like the experience that you have gained and the cost fallacy. So look at this. Losing traders, the trades that they are not the result, maybe not just losing, the results are not as expected, especially if they are losing trades. They are the best teachers. They teach you a lot more than that you can get from 1,000 winning trades, right? That one big loss is that the one that sticks with you and the one that doesn't go away, which will me happen last week on DWAC. No, 2 weeks ago. 2 weeks ago. So you need to look at it from this point of view that losers are the best teachers, and if you're constantly losing, those losers, losing trades, they tell you something, that your parameters are not in balance. All right. So to an event to take place, an important event take place, that it has lots of mechanical and digital components into it. Maybe I should elaborate. Lots of hardware and software components into that operation, everything should be in order, timing should be right, and the amount of steps and the weight to each part component should be properly adjusted. Otherwise, the whole process will not end up well. So one thing is for sure, learning from mistakes is very important. You need to learn from them. All right. Otherwise, it will not be feasible for you, and you will not get to a point that to really gain experience from the time that you have spent for switching from strategies or trading different strategies. One thing is a habit, and it's not something that you can do and to balance, but this is just a habit to gain. And evolving into experience, as in that you are a unfinished project as a trader. Me, John, Thor, Ayman, none of us. No trader is a finished product, and we learn every day. With each trade, we learn. Even if that trade goes in our way and we make 10 hour, 5 hour, 3 hour out of it, or it goes to negative 1 hour, hopefully not more than that, you lose on that trade, right? So you learn from each trade. So evolving to that person that the whole thing is an experience, and accepting that you're an unfinished project and you just need to continue working on it, that would help a lot. Again, learning from negative trades is the most important factor, and the balance is that if you learn from your mistakes, you're a winner, because you have done something that many people are afraid of touching, right? So when you do it and you gain experience, lots of people are afraid of pulling the trigger. Never forget that. So it's always great to just having that one in mind, that maybe you need to switch, okay? Because of why? Because section 1 and 2 that we talk about. Yeah, you have gained experience, you have spent some time, but guess what? When you're switching the strategy, I don't know, maybe the next strategy is your thing. Maybe when you switch to that one, all of these pieces, they come together, and when you put them together, you will see the big picture, and you say that aha moment for you forms. Because these are the pieces for zero to aha moment. You need to have them. Some people need it less, some people have it more. So, some people's goals are bigger, someone's smaller or different. So as we are different process, so we need to have different experience as well. This would be the answer to this section. I'm going to make it a little bit quicker. Already 22 minutes. I don't want to talk for 2 hours or make it. I hope you're already watching it. So you're still watching it. So this part that you said that what you have been doing and collecting data, I mentioned on previous slide that you need to understand the current condition of the market for this part. Yeah, if we are in a recession, if market is in correction mode, if market in decision mode, if there is no trust in the market, if there are lots of ifs, but simply if the smart money is not moving the market and your strategy is not applied to collect data on those trades that are in compliance with big money and smart money, simply all of the data that you're collecting would be somehow irrelevant. Because if you know how the big money is being moved and you have a strategy based on that, it doesn't matter if you're using a lagging indicator, which that's another question. If you're using a lagging indicator, if you're using 20 technical indicators, if you're trading like just price action and VPA, like the famous Thor, that how he trades, so you will be able to capitalize on it. Understanding the current condition of the market and understanding that which strategy works in which market is very important. Very important. Because this is actually the final answer, that should I switch or not? Should I switch or not? When you get to this point, it's like, voila, I want to trade. HOD break. Market is going down. Me, Dell, I'm talking about. I want to trade that. But market is going down. Okay, what should I do? How should I do? Should I switch from this strategy and go trade some Bollinger Band, or I don't know, RSI thing, no. With understanding that this is the current condition of the market, I need to adjust. How? That's another question. But I need to adjust, not to change, not to break, not to get out of a strategy. And with this current condition of the market, what strategy applies better? Maybe I can range trade. How about that? If market is ranging and if market is indecisive, there are going to be lots of fake outs. All those fake outs could be your opportunity to trade if you're range trading. So this is another point of view to look at that. Look at the thing that for me, this part is a little bit, in my opinion, this part is a little bit being underlooked. That you need to also understand the condition of the market and which strategy applies to that current specific condition of the market. We're gonna have on Wednesday, we're gonna have FOMC, Fed's talking. Market gonna go nuts. Simply, it's just gonna go crazy. It's gonna be either super slow or just gonna explode because market people anticipate. But definitely in the afternoon period to stock. I mean, I don't want to say that how gonna go, but it really doesn't matter that what you apply. These significant events, or this significant event, it's gonna change everything. So just understanding that, just gonna help you a lot on moving forward. My last slide would be the last point, the last segment, 5 if that you have started. Well, I'm very happy that you know that what you're looking into and what you want to trade now. It's very interesting that you already have a target. So instead of doubting if this way would be your way or not, you know that this is gonna be your way to go with. So even if you switch, you have a huge collection of data. You know how to collect. You know how to process data. You know how to get from data to information to knowledge. You know the process. You know how to think. That loop that you posted the other day, which is the psychological process for all human. That was very interesting, and I have underlooked that in a very long time because I personally like learning methods. I like to learn learning methods personally. So I like to know more every day. It doesn't matter about what. Everything for me comes together to just help me to understand better every day. So here is my suggestions, because you said any advices in your question. So these are my suggestions because here are what I see. Always use VPA and use it as your second most important indicator or confirmation, because the first should be the technical chart reading, which I think you can, because I saw that you always use daily and 60. It means that you are into time frame continuity. That is a very good thing. But understanding chart very well, it's not just about, okay, this candle is small, this candle is doji. No, I'm talking about a whole understanding of chart. The reference would be books by Steve Nason. He's a god of technical analysis. He just gives you the way to go by technical. So then you mix it with VPA, and then you want to throw some indicators or technical chart indicators and stuff. That's your call. But how to trade them, how to deal with them, that's another thing. So always use VPA. Just take trades with time frame continuity. Right? So it doesn't matter if you want to use RSI, CCI, CCA, you want to use momentum indicator, you want to use TPR, you want to use moving averages or Bollinger Band, which is basically moving average. Whatever you want to use, you need to trade with the trend. All right? Your strategy would be worthless, new or old, if you're gonna trade it against the trend, right? So let me give you a very short experience. Last PCT, because of the first week that I just, like everyone else, I just had horrible days. For some reason, mentally and by psychology, I abandoned all of my knowledge of years of experience and I stuck to a new strategy from someone else. and started to take it from there, and then let's apply it. New strategy comes with a whole new world of data, knowledge, and the basis that you need to know. That person that has designed that strategy has designed it for him or herself. You know, that mentality, like the shape of the way that they think and their thought process, that strategy fits with that. Now you need to move pieces to get to a better point. I didn't. I just applied that one directly, and the results were not interesting. And then at the end I lost it, and it's like, you know what, to the hell, I'm just going to trade whatever I want, which I lost it. So trade with just time frame continuity, and whatever you do, trades come to you, right? Just, this is as simple as it gets. Using VPA, which I always, not here but also outside of the community of PC, that I always suggest, trading with volume profile, especially the one that John has, because that one is the most comprehensive one. Like it's so powerful that the power is not visible in that volume profile. And especially I like the one that just stair step up. I call it stair step up to heaven. There was either red or white ones, 2 stair step up goes up. Doesn't matter what you trade, whatever that you trade with that, it's gonna be profitable, right? Using that, it filters out everything. KISS, keep it simple, stupid, or stupid simple, either way. You're gonna, let's say you have 4 indicators, 4 confirmations for each trade, right? So you wanna trade 1,000 times, right? So you're gonna do the process of 4 confirmations 1,000 times. There are 4,000 confirmations. If you add 2 more, that's so much mental process to be used. I'm not going to say this 1,000 times in a month, but even half of it in a span, in a short period of time, it could be destructive, and it could get to mental fatigue. The simpler that you trade, but with firm and clear instructions, the better result would be. Whatever strategy that you're going to pick, if it's worth switching to or not, that strategy should have simple instructions. It doesn't mean that worthless, but it just means simple, right? And the last one would be that, anyway, so you want to trade 1 minute ORB. Okay, ORB. Just search on that one on websites. First of all, BBT and PCT community has the best information that you can get out of. They're just like real traders. No guru or furu is sitting here. Like, look at Andrew. He's so transparent. He just trades up and down. You can see his profit and loss. He shares that when he makes money and when he loses money. You can see these are real traders. No one say, no, I'm always green. No one. Look at John. Every day you can see what exactly his biggest loss or win has been. Like, you can see these people are real. So their experience is also real. So study their ORBs or ABCD or Thor, which is one of the most unique ones between everybody. It gives you an idea that what's going on, right? So that's definite that criteria and parameters to execute a trade is different for all of these traders that we have. Like how many, like I see sometimes 92 people in the Slack group, 92 different strategies. Nobody's trading like the other one, but we are in the same groups, right? So if you are trading with like ORB, you want to trade like that, just searching about what are the shortcomings of ORB strategy, what are the empowering points and the points that it can cover but no other strategy can cover, and what are the weak points. So this gives you an idea. So when you're crafting your own strategy based on the knowledge that you have, you will put pieces together to cover that point that you understood that are missing. This would be my suggestions. I know that maybe it should be short. The slide is, I have posted the slide, but I hope that I ranted 34 minutes of 34-minute long video. I wanted to just make for 5 to 10 minutes, but this is what I wanted to say. I couldn't make it shorter. So hopefully I could help with the limited knowledge that I have. And thank you for asking the question. It made me think about my own process, right? And it was great to look into my own trades and see that, assess my own trades. I because of the current condition that I have, I'm behind everything, and I haven't been able to even assess my October properly. But what you just said, I look into my trades and my strategies somehow with the 10 biggest one and 10 smallest one, 10 profitable and 10 losing ones, so I have an idea what's going on. And this, you are the purpose of this strategy, and hopefully other can use this. And thank you for always bringing new content. It's great to be around awake people that just awake around and are aware of their surrounding. Thank you, and I'm just around here. If anything else, shoot me up. Have a good one.